Lebanese Emergency Committee says Lebanon needs approximately $426 million to address the current humanitarian crisis. Eurostat zone inflation drops to 1.8% for the first time since mid-2021 in September. Russia will increase its military spending to 13.5 trillion in 2025. Welcome to the Economic Bulletin, where we deliver comprehensive coverage and expert insights into key updates on the pivotal economic trends and financial shifts influencing the economic scene. Now we start off with Lebanon. The Lebanese Emergency Committee announced that it needs approximately $426 million to address the current humanitarian crisis. According to the committee, around 1 million displaced individuals are moving from place to place every 24 hours due to the Israeli aggression. The Emergency Committee added that it is coordinating with the relevant ministries to communicate with the international organizations to provide the necessary support and humanitarian response. The United Arab Emirates has announced the dispatch of $100 million in urgent aid to the people of Lebanon. UAE President Sheikh Mohammed bin Zayed Al Nahyan has reaffirmed his nation's commitment to Lebanese unity, national sovereignty, and territorial integrity. The UAE also called for international support to prevent further escalation and stressed the importance of providing full protection to civilians in accordance with international law. Lebanon's economic tale over the last 5 years reads like a story of struggle, resilience, and turmoil. A land once renowned for the beauty now grapples with crisis and uncertainty. As the echoes of explosions fade, a haunting question lingers: can Lebanon's economy survive another hit?
Lebanon's economic collapse is deepening with further instability in Beirut. Following the Israeli ground invasion and air raids, dubbed the Arrows of the North, tensions have soared. The assassination of Hezbollah's leader Hassan Nasrallah marks a major escalation, sparking fears of a wider regional conflict. Analysts warn that this growing instability could further cripple Lebanon's already fragile economy, making recovery even more difficult. For over a year, relentless bombardments have devastated Lebanon's infrastructure. Vital sectors like tourism and agriculture, once the backbone of the economy, are collapsing, with losses mounting into the billions. The European Bank for Reconstruction and Development has warned that this war is accelerating Lebanon's economic decline. A joint UN-UNICEF study depicts Lebanon as standing at the edge of total collapse. The tourism sector alone faces losses exceeding $3 billion, while agriculture, critical for food security, is in ruins. Families in rural areas are left without their primary sources of income, as targeted destruction decimates the land. According to the World Bank, poverty in Lebanon has tripled over the past decade. In 2023, inflation surged to a staggering 221%. And the Lebanese pound lost nearly 90% of its value. Lives and savings were destroyed as a result. A year on, the catastrophe has worsened, leaving millions struggling to survive. Total destruction looms over Lebanon, with millions of lives at risk.
Joining us today is Mr. Ali Hamoudi, economic analyst. Thank you for joining us here on the Economic Bulletin. First, what are the economic implications of the recent Israeli escalations in Lebanon?
Thank you for having me. I think predominantly, as your report said, the major effect is that inflicted on Lebanon and the Lebanese people. I think a new war would have catastrophic, or is having a catastrophic effect on the whole entire country for many reasons. Firstly, Lebanon economy, as the report said, is in complete ruins following the financial crisis, which we know started in 2019 and made worse, if I may say, by the ruling elite refusal to implement necessary reforms to stabilize the economy that they themselves had destabilized. The country's GDP has plummeted more than 40% from its 2018 levels, and it's now completely dependent on capital inflows from Lebanese people working outside Lebanon, sending money to their family. It's really, and there is complete distrust within the Lebanese banking system. So it's a cash economy, and as the report said, they were hoping that in 2024 they would have over 1 million in tourists. This is all went away because of the war in Gaza. Many people have cancelled any, especially foreign tourists and regional tourists into Lebanon. So that's the major, if you like, the economic impact that we are seeing on Lebanon and maybe its neighbors. If you're asking me internationally, we have yet to see any major effect. Okay, today we have seen oil go up simply because there are news now that Iran is on the verge of launching missile attacks on Israel. Hence, oil is up today 3%. Gold is up by $30, but that's about it for now.
So the financial or goods aids that Lebanon is receiving from other countries, are they enough to prop up the Lebanese economy for a short while, or is this something that will not be sustainable?
It will. I mean, it all depends on how long the war would go. It's living on handouts and help. Okay, it will help the most those who are in most need, but I don't think this is a financial plan for a country like Lebanon, who's been striving for financial stability, economic stability for some time. So it will be essential, but certainly by any means not enough to get Lebanon back on its feet economically.
So you had spoken about the idea of certain sectors of the economy being affected by what's happening, specifically the tourism industry. So what other sectors could be affected due to the recent escalations taking place in Lebanon?
I mean, if you're talking about Lebanon, mostly, every other sector. You have the farming industry, you have as well as the tourism industry has so many other industries dependent on them. The recreation and leisure sectors all get affected. Even the real estate sector also get hugely damaged. And the stopping of inflow of foreign investment, it's vital for Lebanon, and in fact vital for most economies in the Middle East. So for that to dissipate and go away is certainly not helpful.
So amid this escalation, is there any way to mitigate the severe economic impact from what's happening? Can they somehow have some sort of plan, for instance, to get investors, as you were saying, to be more interested in investing if within, may say, the near future once this escalation ends?
I think the predominant thing that has to happen in Lebanon, it's political. There is no political unity. The country is in disarray. For most, it's usually heads of parties that run various aspects of the economy. This is by no means a way to run a country. So the president and the prime minister hardly have any powers to implement anything. So it's far too early, I think, to talk about any feasible plan that I can think of to put for Lebanon. I think for most it needs political stability, for the sectarian and all of these aspects to be put aside, and the country needs to be run by people who love the country despite where they come from or their religious affiliation. So I think we're a long way from that.
So what about the prospects of Lebanon's economic recovery when it comes to the long term, especially given that Lebanon has been battered by a lot of things, including now with the Israeli bombardment?
Again, I think what I've said just now still.
I mean, like
still
rebuilding the
what
country
it needs,
as well.
It needs, I mean, look, for any country to flourish economically, what they need stability. They need political stability. They need security, and they need also fiscal stability. By that I mean a stable currency, a stable central bank that has the right policies. The ministries, the various ministries that would attract foreign investment and would help
sir,
even local investors.
I'm sorry, I have to cut you off there. It's just that we're running out of time for this segment. Thank you, Mr. Ali Hamoudi, the economic analyst, for your insights. Thank you so much for joining us. Moving to Europe, statistics agency Eurostat showed that Eurozone inflation dropped to 1.8% in September for the first time since mid-2021. This comes below the European Central Bank's 2% target, reinforcing a possible European Central Bank rate cut this month. Core inflation dipped to 2.7% from 2.8% on slower services price growth. According to the British Retail Consortium, prices in British shops experienced their fastest decline in over 3 years in September, signaling a reduction in the inflationary pressures on consumers. Annual shop prices deflations dropped to 0.6% from 12 months leading up to September, the lowest rate since August 2021, and a decrease from the 0.3% drop recorded in the previous month. This marks the 7th time in 9 months that the rate of price growth has slowed. Official figures also revealed that consumer price inflation remained steady at 2.2% for the second consecutive month in August. A draft budget revealed that Russia will increase its military spending to 13.5 trillion rubles in 2025. The latest planned increase in spending will take Russia's defense budget to 13.5 trillion rubles in 2025, up from 10.4 trillion rubles in 2024. Taken together, spending on defense and security will account for about 40% of Russia's total government spending, or 41.5 trillion rubles in 2025. In Asia, Japan's unemployment rate fell to 2.5% in August. Data released by the Ministry of Internal Affairs and Communications has shown a 0.2% drop from July's figures. The numbers of employed individuals in the country increased by 0.4% on a seasonally adjusted basis, reaching 67.91 million, the highest level recorded since records began in 1953. Still in Japan, Japanese Tankan survey has shown that business sentiment among Japan's large manufacturers remained steady in the third quarter. The Bank of Japan survey recorded the benchmark index at plus 13 from the July-September quarter, unchanged from the previous quarter's April to June survey. A positive figure indicates that more companies expressed optimism about business conditions compared to those who felt pessimistic. In contrast, the index for large non-manufacturers rose to plus 34, up from plus 33 in the prior quarter. Moving to the MENA region, the Central Bank of Egypt showed that the fiscal year 2023-2024 has recorded an uptick in foreign direct investments. The latest balance of payments data revealed that Egypt has achieved a net inflow of $46.1 billion during the fiscal year compared to the previous fiscal year's $10 billion. Portfolio investments in Egypt also saw a significant jump with a net inflow of $14.5 billion compared to a net outflow of $3.8 billion recorded in the previous year. This is attributed to the strong foreign investor appetite driven by the improved performance of the Egyptian economy. On the same note, the Central Bank of Egypt has announced that tourism sector revenues increased by 5.5% to record about $14.4 billion during the fourth quarter of this fiscal year. In a statement, the central bank has attributed the increase to tourism revenues the increase in the number of tourist nights by 5.5% to reach 154.1 million nights. According to Saudi Arabia's preliminary budget statement, the country projects total revenues of $315.5 billion in 2025, while expenditures are expected to reach $342 billion. This will lead to a deficit of $27 billion driven by expansionary spending policies aimed at fostering economic growth. The economy is forecasted to grow by 4.6%, a significant increase from just 0.8% in 2023, with non-oil sectors expected to expand by 3.7%. Finance Minister Mohammed Al-Ja'dan emphasized the commitment to enhance spending on essential services and implement strategic projects, stating that the positive economic outlook reflects Saudi Arabia's dedication to its ambitious plans. Qatar Airways has agreed to buy a stake in Virgin Australia in a deal that is expected to expand the Gulf Airlines' international reach. The deal will see Qatar Airways buy a 25% equity stake in Virgin Australia from private equity group Bain Capital. The proposed sale will allow Virgin to start offering long-haul flights for the first time since 2020. More good news from the Gulf as Abu Dhabi's GDP grew by 4.1% in the second quarter of 2024. Abu Dhabi's Statistics Center attributed the growth to the expansion of the non-oil sector. The report revealed that Abu Dhabi's GDP hit a record high in the second quarter, exceeding 297 billion dirhams. The Emirates' non-oil economy expanded by 5.7% in the first half of 2024, driving overall economic growth to 3.7% year-on-year. According to Israeli media reports, the cost of ongoing war in Gaza has soared. The Israeli military has increased the estimated cost between 140 to 150 billion shekels from 130 billion shekels. Media reports indicated that costs could rise in the event of a ground operation in Lebanon or a direct confrontation with Iran. Initial estimates issued earlier this year projected the cost of the war at around $37 billion. However, as the war continues and tensions in the region escalate, these estimates have been updated and could exceed $42 billion. As for the energy sector, the U.S. Department of Energy has announced the purchase of 6 million barrels of oil for the Strategic Petroleum Reserve set for delivery through May 2025. This move is part of the broader plan to restore reserves following President Joe Biden's record release of 180 million barrels in 2022. It is hoped that the fuel prices will stabilize following global price volatility in the aftermath of Russia's invasion of Ukraine. U.S. has reportedly acquired 3.5 million barrels from ExxonMobil, 2 million from Shell Trading Company, and 500,000 from Macquarie Commodities, with a total cost surpassing $411 million. The Abu Dhabi national oil company ADNOC has agreed to buy German chemicals company Covestro for 15.9 billion euros. The deal is one of the biggest foreign takeovers by a Gulf state. The deal is part of the UAE's initiative to reduce their dependence on oil. As part of the Emirates' strategy to reduce its heavy oil dependence, ADNOC has announced the launch of a €62 per share voluntary public takeover offer for all shares in Covestro. In commodities, gold prices rose as safe haven demand increases due to Middle East tensions and expectations of further Federal Reserve cuts. Spot gold was up 0.6% at $2,649.59 per ounce at 10:57 GMT. U.S. gold futures edged 0.4% higher to $2,671. In related news, Goldman Sachs has raised its gold prices forecast to $2,900 per ounce from $2,700 per ounce for early 2025. The bank cited gradually rising exchange trade fund flows with interest rate cuts in the West and China and higher central bank purchases. The bank emphasized its ongoing recommendation for gold, citing several factors: the gradual increase in demand driven by lower global interest rates, consistently high central bank purchases, and gold's advantages as a hedge against geopolitical tensions, financial instability, and recession risks. The ongoing global events continue to drive investors towards safe haven assets, with gold prices reflecting this shift positively. And in the past year, gold prices skyrocketed by $809.51, an impressive 44.34% increase, underscoring the metal's role as a reliable hedge against uncertainty. Global stocks had a mixed performance trading, with investors awaiting key economic data from the United States for potential Federal Reserve interest rate cuts and recent Eurozone inflation data. In the United States, the Dow Jones Industrial Average traded 0.6% lower, the S&P 500 traded 0.9% lower, and the Nasdaq Composite lost 1.4%. In Europe, France's CAC 40 slipped 0.3%, Germany's DAX added 0.4%, and in London, the FTSE 100 gained 0.3%. Moving to Asia, Japan's benchmark Nikkei 225 traded 1.9% higher. Markets in China and South Korea were closed for the holidays. That's all for now. Here's a roundup of today's key headlines. Lebanese Emergency Committee says Lebanon needs approximately $426 million to address the current humanitarian crisis. Eurozone inflation drops to 1.8% for the first time since mid-2021 in September. Russia will increase its military spending to 13.5 trillion in 2025. That's all for today's economic bulletin on Q News. Stay connected for more news and updates.